Hi, economy friends. Last week's crypto recap reads like a novel. Tariffs shook macro markets. A former Fed governor steps into the spotlight. Tether builds a golden bunker. Corporate treasuries are loading up on Bitcoin. And WTF is happening with WLFI. Let's find out. As of February 1st, Bitcoin has been drifting lower, trading around $77,000, down 5% on the week. Ethereum follows at roughly $2,300, and Solana holds near $100. XRP heads around $1.6. Those numbers set the stage for a week dominated by macro headlines and corporate maneuvers. U.S. tariffs on Chinese imports now average 29.3%. Yet, China has quietly offset the impact by tightly managing the yuan to keep exports competitive. Analysts from JP Morgan argue that it's not the tariffs themselves, but the resulting swings in dollar liquidity that rattle the crypto markets. Bitcoin tends to slump when tariff-induced uncertainty makes dollars scarce and rebounds when tensions ease. China's export machine remains robust. Real exports are on track for 8% growth in 2025, with global share rising to 15%, which suggests a resilient backdrop for risk assets even as political noise grows louder. Stablecoin issuer Tether grabbed headlines for buying 2 tons of gold per week, roughly $1 billion per month, building 140-ton stockpile valued at about $24 billion. Most of this bullion backs Tether reserves, with a portion supporting ZLT gold-backed token. The gold is stored in a secure former nuclear bunker in Switzerland. Tether CEO says tokenized gold removes ambiguity around bar ownership, offering transparency that traditional ETFs lack. While analysts know that Tether's rapid buying pace has exceeded the quarterly purchase of entire nations. This move could fortify Tether's balance sheet, but also links its stability to gold's performance. Former Fed Governor Kevin Warsh has been tapped by President Trump to chair the Federal Reserve. Warsh served on the Fed's board from 2006 to 2011 and was instrumental during the 2008 crisis. He has criticized aggressive quantitative easing and large-scale asset purchases, arguing that they distort markets and threaten price stability. Though considered hawkish, analysts believe Warsh could still guide the FOMC towards moderate rate cuts while maintaining independence. In a landmark vote, the U.S. Senate Agriculture Committee approved the Digital Commodity Intermediaries Act by a narrow party line margin, 12 Republicans versus 11 Democrats. The bill would empower the Commodity Futures Trading Commission, CFTC, to oversee digital commodities, establish definitions and consumer protections, and implement conflict of interest safeguards. Democrats failed to attach amendments restricting public officials' crypto involvement, and the bill must still be reconciled with a version from the Senate Banking Committee. Nevertheless, this marks the first time a crypto market structure bill has cleared the Senate committee, signaling growing momentum for U.S. regulatory clarity. Regulators aren't waiting for Congress. In a joint statement, CFTC Chairman Michael Selig and SEC Chair Paul Atkins unveiled Project Crypto, an initiative to harmonize definitions, modernize surveillance, and create clear on-ramp for compliant participants. They argue that existing fragmented rules are precise, not punitive, and that heavy-handed regulation would push innovation overseas. The goal is to align oversight across agencies while preserving merit-neutral standards and eliminating duplicative requirements. For markets participants, a coordinated approach could reduce uncertainty and encourage institutional adoption. Over in Europe, regulators are finally moving forward as well. Ripple has now received full authorization for an electronic money institution license in Luxembourg, clearing the way for it to scale fully regulated payment services across the entire European Union. Strive completed its acquisition of healthcare company Semler Scientific and retired most of the inherited debt. It simultaneously added 333.89 Bitcoin at an average price of almost $90,000, bringing its total holdings to 13,131.82 BTC, worth about $1.17 billion. With this purchase, Strive vaults into the top 10 corporate Bitcoin treasuries and shows how public companies are treating BTC as a strategic asset. MetaPlanet, already one of the largest corporate holders, approved an overseas capital raise of up to $137 million to expand its Bitcoin stash and repay debt. MetaPlanet reiterated that it views Bitcoin's scarcity and portability as reasons to hold it as a long-term store of value, and remains the 4th largest corporate holder with roughly 35,102 BTC, worth more than $3 billion. Now the juicy stuff. A Wall Street Journal investigation revealed that IEN Investment One, controlled by UAE National Security Advisor Sheikh Tanoon bin Zayed Al Nahyan, quietly purchased a 49% stake in Trump-associated crypto venture World Liberty Financial for $500 million last year. Reports say about $187 million flowed to Trump family entities and another $31 million to co-founder Steve Witkoff's family. The deal, signed by Eric Trump, coincided with the US agreeing to sell advanced AI chips to the UAE. Senator Elizabeth Warren, as usual, called the arrangement corrupt and demanded testimony from those involved. It's still early, but we'll remain vigilant for the impact on WLFI and USD1 trades. That wraps up an action-packed week, where macro policy, regulatory shifts, and corporate treasurers all pulled crypto markets in different directions. And if you want to dive deeper into how venture capital views the current landscape, make sure to check out my hour-and-a-half conversation with notable VC founder on the buyconomy.com YouTube channel. We talked about their investment thesis, how they deploy capital, their dual fund structure, Web3 and AI trends in 2026. Thank you for watching, and I'll see you next week.